All right, excellent. Okay, all right, so it looks like we're ready to go. I'd like to once again thank everybody who's taken time out of their busy Saturdays to come and spend this time here with us, the team at Trade Thirsty. And I'd like to welcome our next speaker. He hails from Acorn Wealth Company. I actually got to meet John a little over a year ago, and while he's an Aussie, he actually lives in Canada. And Hubert and I call him our crazy Aussie, crazy Johnny Aussie. And if you don't know much about John, he grew up around the market, so he learned at an early age that fundamentals don't necessarily determine the price action of a stock. So he started working real hard to go and master technical analysis. And so now what he does is he teaches traders, and he's built stock scanners that help his members go and cherry pick those good trades. Like I said, we've known him for about a year now, and I've watched his trades and followed him along this path, and he's very consistent in his analysis and his setups. And if you're interested in knowing somebody who can help you pick when a big change is coming in the market, these guys actually called the top before the '08 crash, and then they also predetermined big market corrections in April of 2010, then again in July of 2011. So this is John. He teaches. He's a head trader over at Acorn Wealth, and so here he is. Y'all give John a big round of applause, and it's all you, Johnny.
Well, thanks so much, Jeanette and Hubert. It's a pleasure to be here, and thank you for all the West Coast residers like myself who woke up early. But yes, today's going to be all about scanning and the importance of being efficient and effective, and how we combine that into picking key turning points in the market. So I hope you all enjoy today, because we've got a lot of action packed into this afternoon's presentation. As I said, the main focus of today's presentation is all about efficiency and knowing what you're looking for, because you can take all the indicators in the world, you can take all the whiz-bang strategies, but unless you know how to combine them and put it into an effective recipe, it's useless. And maybe that's what most people have experienced when we learn so much information that we get information overload or analysis paralysis, where we look at a stock and our main objective is, are we right? Are we going to make money? And that's a very difficult question to answer, because there's so many different things you could look at. You could look at the 220 different indicators out there. You could listen to every person on TV and what their opinion is, and still come up confused. So in my opinion, the most important thing as a trader is not to wonder whether you're right or wrong, but whether you're actually correct in your strategy. Are you following your rules? So we need to have those rules in place. So as we start to define how we put a strategy together, there's many ways to go about it, but I'm going to throw a few different ideas at you, and we're going to get deeper and deeper into it as we go through today. So when we're developing a scan or a strategy, basically what we always have to start out with, like any kind of science project, is an idea. So let's go back a couple of weeks to where the market was topping out. The sell in May and go away theory had been thrown out. The market rallied. It had huge momentum. Stocks performed. But let's say you were of the opinion that this market is falsely strong, and while it may have rallied, stocks really should be starting their descent soon. So how would you go about building on that idea? Well, what you have to then do is you start with this idea, this philosophy, and then you have to build what the conditions of that scan are. And we're going to go further into this today, but let's just start with this example. So let's say that we feel the market is in this case. So what are the kind of conditions that we would look for? Well, we might look for stocks that are in a weak sector. I'll talk about that in a moment. We might look at stocks that are a high P/E ratio, because stocks in a high P/E ratio that are highly speculated upon as a result are by nature set to potentially have big drops if confidence in the market fails. And how do we find signs of confidence failing? Well, wouldn't the institutions be selling? Wouldn't the insiders themselves be selling? What if we look for a high price-to-book ratio as well? And if we find all these factors all occurring on a stock that is speculated to be such a wonderful thing due to its high P to E ratio, could that possibly be a perfect storm of something that's set to drop? So these are all conditions. So these don't, and for the fundamentalists out there, maybe these are the types of things you look at. But what these things do not tell us is timing. Because these could be set to drop, but that doesn't mean they're not going to go 5 or 10% higher before they do go down. So now we need timing mechanisms. So we now get into triggers. So, for example, to find the timing of one of these conditional base scans, we might want to see, say, the market went up 2%. We could search for stocks that in fact went against the grain and went down. And at the same time broke key support. And once we've got that, which is a price action pattern, then we can look at the indicators. Now we know the type of thing we're looking for. Now we know what we've spotted. Now we can look at the indicators. We can say, okay, well, how do we know if that break in support was really a break? Well, we look at the increase in volume. We look at the negative downtrend. And then to make sure that this trade actually has some life in it, we might look at things like ADX or any kind of movement-based indicator. So to do something like that, that's how we start to build an idea. But no matter what your idea is, we always need to have these three things: an idea, the conditions that support it, the triggers that give us the timing, and then, and only then, the indicators that will give us that confirmation. So once we have these ideas in place, we can simplify basically any kind of strategy we want to follow into this kind of a checklist. So, and feel free to write this down, because this is basically what we go through in any of the strategies that we use and implement at Acorn. The first question we want to ask when we're going about any trade or any week in the market is the first point, which is the market bullish or bearish? And I say this with kind of a tongue-in-cheek attitude because I actually hate that question. I think the question of is a market bullish or bearish is flawed because it's subjective, because it's dependent on what your opinion is. And as a trader, as a technical trader, there's no place for subjectivity. It should be rule-based or process-based. So, because that's the only way you can replicate it, right? So rather than asking the question of is the stock market bullish or bearish, let's replace that with is the market at resistance or support? So let's answer that question now. Let's go over to the live markets and let's pull up the S&P 500. So we've got the S&P up here. I'm just going to remove some of these little details here. And let's look at a period of about 11 months out. So as we go into what's been occurring in the recent market conditions, for those of you who are sitting there and kind of dumbfounded by what on earth is going on, let's replace that with an objective scenario where we can ask that simple question: is the market at resistance or support? So if we go from a left to right based analysis and draw on the trend lines, what we can see is that since June 5th, the market has been in a bullish mentality because it's been above support, broken above this trend line that's been there for quite a while. We can make the correlation therefore as well on the downside. So for all of June and a lot of July, we were at support. And if we then zoom in, we can see that as of the beginning of August, we are now at resistance. We have broken that trend line and we are now under that point of rejection. So rather than asking are we bullish or bearish, we can start to get into these types of more objective questioning. So the next question then we want to ask is, if we are at resistance, then we're going to be looking for shorts. If we're at support, we're going to be looking for longs. And then we'd go into our sector analysis, where we start to break down all the different sectors, such as the Dow Jones Transport. So let's go back to the markets again. So as we broke down through this support level and we found ourselves at resistance, if you'd gone through a scan of the different types of sectors, we would have also found that the Dow Jones Transport at that same point was breaking a key resistance level as well. And so this then allows us to further drill down into a process of saying, okay, we're looking for shorts, and what's the best sector to look for those shorts in? Maybe the Dow Jones Transport. And this is without using indicators, just purely looking at support and resistance and trend lines. So then what we can do is we can then start developing that idea to find the types of stocks that satisfy the conditions that give that idea some backbone. And we actually did this in the last class that I'll talk to you about at the end of this presentation. We actually went through this entire process with a group of about 200 students, and went through this process start to finish in live markets. And we said, all right, well, it does look like the railroads are the weakest stocks within the transports, within the short market. So let's look for a chart that has a bearish sentiment to it. And we went through a scan, which I'm going to be sharing with you in a moment, where we identified all the railroad stocks that had that bearish sentiment. And the one that came up that was our pick was CSX. And if you have a look at CSX, you can see that this was breaking down quite badly, much like the Dow Jones Transport. And for all of you who've been sharing the sentiment today of looking at things like Chaikin money flow and so forth, this is a version of money flow called Twiggs money flow, and this represents what we call the smart money. And as you can see, what was happening here is as the stock CSX was rallying, you can actually in fact see that the money flow, or the smart money that was going into the stock, was decreasing. So we have this wonderful scenario in terms of looking for shorts, where the stock was going up, and as it went up, the smart money was selling off their position to you, or as in the retail market. So a perfect scenario where money is flowing out as price goes up, fantastic shorting opportunity. And the options on that, we actually looked at the put options. I believe they were the $30 put options, August put options, went up from 30 cents to 92 cents in 4 days, which was a 340% return in just that short period. So that's an example of how you go start through finish of putting an idea into a scan. Now, once we have these types of stocks, obviously we're going to be looking at things like price action and patterns, which again will come later in this presentation. But this is the type of idea process that we want to develop. And then once you can develop a consistent set of rules, life becomes much easier. And one of my business partners always used to tell me, he used to say, Johnny, if you do the same thing more than once in a day, why haven't you got someone either to do it for you, or better still, designed a program to do it automatically? And that's kind of been our main focus at Acorn, is trying to find ways to automate systems, because if you do know what you're looking for, the computer can do it for you. So as we start to look at the markets, again, the question comes back, are we bullish or bearish? We replace that with, are we at support or resistance? The next thing we start to get into now is building patterns into the scan. So one of the questions we want to ask when we're at support or resistance is, do we have momentum or do we have a lack of momentum? And so how is momentum defined? What we're looking at here is an understanding of what momentum is. So for everyone in the audience, what would you define as momentum? Or what is a true uptrend? What's that defined by, do you think? You know, I want to throw some ideas out there. Higher highs, higher lows. Actually, I see a couple of my students in here. Well, all right, we've taught you well. All right, so yes, higher highs and higher lows is the classical definition of an uptrend. But let's think of that in a deeper sense. If we have higher highs and higher lows, surely wouldn't that be something such as a rising wedge? So if we were to see something like this, for example, where the stock was making higher highs and higher lows, but contracting in the range, would that be bullish? Probably not. That would be a rising wedge, which would be, by definition, a bearish formation. So what we really need is something more. What we need is we need higher highs, higher lows, but we need them to be closing at the top of the range, and we need increasing volume to accompany it. So when there's true momentum, what you're going to see is a combination of all three: high closes, higher prices, and higher volume. And that is the true test of whether there's momentum or not. So again, that is actually what money flow is defined by. So when you see, for example, stocks making higher highs and higher lows here, what this indicator down the bottom is doing is telling us that while price is going higher, it's closing lower in the range, volume is decreasing, and we're actually building a possible reversal pattern. So as we go into our scans, the trick to being a consistently highly profitable trader is being able to know what scan is best utilized. So if we are, for example, at resistance, so we've hit the trend line at the top, the question we want to ask is, do we have increasing momentum or decreasing momentum? So if we've hit the trend line and momentum is dropping, then we want to be looking for reversals. And so these common reversals would be double tops, double bottoms if we're going bullish, head and shoulders, inverted head and shoulders. These are all reversal patterns where as we hit a resistance level or support level, the momentum is changing direction. So for those of you who were wanting to know what direction the market was going to go recently, when we broke out in June, here's how you would have answered that question. When we hit that trend line and we ask ourselves, is there momentum and go long, or is there a lack of momentum and do we look for reversals? We look down to, again, that smart money indicator that tells us what's going on, and we see that it's telling us that we are making higher highs, we are increasing in volume, and better still, we're closing in the top half of the range, and therefore money flow is increasing dramatically, even though price really hasn't. And that tells us we're going long. So this is where momentum plays a role. And it's important to understand then, once you can predict market direction, then to know what types of patterns will have the highest probability. So, and every pattern has different probabilities. If we're looking at a falling wedge, where again markets are contracting in their range, that's bullish. If we're looking at a dropping stock, again contracting in the range, bullish still. And all of these different patterns, and most market technicians would recognize that there's at least 60 to possibly hundreds of different commonly used patterns that the smart money will cycle through. And each of these different patterns has a probability of profit, of winning. It has a amount of profit that can be expected, whether it's 8% or 30%, and it has a level of predictability in terms of how often does it occur. So as a trader, your job is not to try and be an expert at all of them, but to try and specialize in a couple and get really, really damn good at it. Because you wouldn't go and eat at a restaurant, I hope, that served 100 entrees, and therefore, for the same reason, you don't want to try and be an expert at 100 patterns. You need to specialize in something. So the thought process, if you want to drill it down further, is, or the natural question, is, well, which is the highest probability pattern? Which ones should we specialize in? And basically, what you really want to be armed with is to have at least one pattern that works really well for each different market condition. So what kind of market conditions do you have? Well, there's market conditions that have, looking at Russell's comment, not a Cheesecake Factory fan. Actually, I've eaten there quite a few times when I was living in Pasadena, but that's another story. But yes, we can have markets that are bullish or at support with momentum, in which case we want to be looking for momentum trades, not oscillating trades. For example, such as fallen angels, or other terms for that would be cup and handles, saucer patterns, that type of thing. Another example, momentum, swing trades. This is where we're looking again when we have bullish momentum-based markets. If we have bearish markets, in other words, that the stock, the S&P, the Dow, and the Russell is at resistance, then we want to be looking for bearish and oscillating trades. So if we're at resistance and momentum is weakening, we want to be looking for down channels, oscillating stocks, things where we're not looking for momentum. In fact, we're actually looking for oscillating moves. If we're bullish and oscillating, again, we look for the opposite. We're looking for where stocks are bouncing back and forward between extremes to the upside. If we're rallying into resistance with no momentum at all, we can be looking for things like double tops, because what that tells us is that the market is rallying, but because the smart money is not buying, in other words, there is not momentum, it is likely that they're selling into the rally and things will drop. So we can scan for double tops. If we're bullish and the momentum is dropping, we can look for things like head and shoulders. And these have been fantastic, by the way, recently. I'm not sure how many people are very familiar with head and shoulders, but the market has been full of them. In fact, the entire market itself is full of them. For anyone who watched Trade Thirsty video on July 31st or the ones preceding it, you will have watched us talk about this. If you look at the S&P 500 of late, and we zoom in, I'm just going to delete these lines. What you may notice if you're drawing your trend lines properly is that there is your neckline. And what you're dealing with here is a complex head and shoulders, which is a left shoulder, second left shoulder, head, right shoulder, second right shoulder, and then if you look at the drop we've had, that was exactly where we went to afterwards. I'll be showing you some more of these in a moment. So again, understanding the patterns is key, because when you can see that we were, as the S&P rallied, the momentum or smart money was selling off into that rally, and then you combine it with a pattern which is a head and shoulders, that tells you to a high degree of probability that the market is about to drop. And this a channel, by the way, David, will always be in a head and shoulders, because by definition a head and shoulders is a channel, but in between has a big peak in the middle. Other patterns. Bullish, if we have a bullish market with momentum, other high probability patterns that are successful are pennants or breakouts, in other words. And one of my absolute favorites, flags. So going through this checklist that I displayed earlier on today will allow you to then drill down to the highest probability chart pattern that's going to make you money. Just like you wake up every morning and look out the window and say, what am I going to wear today? Well, is it raining? Is it sunny? What's the temperature? These are questions you ask yourself every day so you can look after your health. You should have the same checklist when you go out each day into the market and know how to dress for it, so to speak. If you don't know how to go through that same checklist with your money, it's just as good as walking out into a thunderstorm with an electric rod strapped to your head. So this is the process you want to be kind of going through. Now, once you've gone through the scan and you've found the stock that you're looking for, then you want to go through and actually look at the time frames. So we want to go into looking at do we have multiple time frames that then actually confirm the trade. So for an example, let's go into something that came up in our scan recently. And I like swing trading the most. I like swing trading, I like options, because I don't like to work too hard. Trading's about making your life better, so efficiency is king. So what I like to do is I like to run my scans at night. I like to find my trades, and I like to put them in and program into the brokerage to execute for me during the day. Now, if you like to day trade, that's fine, but you should still be looking at efficiency. So let's go into LDRH. So this is a stock that came up in a scan that I ran a few days ago. And what you can see is that, again, tying into the idea of the fact that the market is very bearish, my philosophy was that any stock that had any kind of rally was going to attract a lot of selling, especially if it was based on earnings, because those are already going to be baked into the pie. So what I was looking for was stocks that had earnings announcements within the last 2 days, that had decreasing volume, that had increased in price. Basically, so the stock had rallied and people were selling into it. And this was one that came up. So if you look at LDRH, you'll notice that it had this big pop. And if we apply our upper Bollinger Band, you'll see that it had exceeded that, which is a very bearish sign if it's not accompanied by volume. So on the scan, this had rallied, had a bearish close, and when we were looking at it on Thursday, it looked like a pretty good shorting opportunity. Now what you might not see when you zoom in, is that it also was going through a head and shoulders pattern as well. So looking at the larger time frame and then zooming into the smaller time frame can be very valuable in actually picking out where the position is going to go. Okay, let's go back to our slides. And by the way, if there are stocks that people would like to talk about, we will be taking some time to go through those. So feel free to start collecting your watch list. I can see Gary's right on top of it. All right. Now, this and only when is when you start applying indicators, because indicators are an answer to a question. Right? A lot of people always ask me, a lot of students ask me, what's the most powerful indicator? Or which indicator do you like the most? Or do you always buy a stock when the MACD is doing this? These are all questions that are actually impossible to answer, because an indicator is a question. It's an investigation of what's happening between the stock's price, time, and volume. And to know what answer you're looking for, what you want the indicator to be telling you, you need to know what question you're asking in the first place. So a lot of people go out and they buy books on technical analysis, and they're taught that, you know, when the stock's 9-day and 20-day moving average cross, that's a buy signal. And you know what? You're absolutely right if it's a momentum trade. If it's an oscillating trade, the moving averages don't matter at all. So, for example, if you're buying an oscillating trade, you want the RSI, or relative strength index, to be as low as possible. And you're looking for the stock to be outside of the Bollinger Band, as far as possible below the Bollinger Band, if you're buying an oscillating trade. Whereas if you're buying a momentum trade, you might want the stock to be hugging the Bollinger Band. You want the RSI to be going up through 30. So the indicators are just ingredients that make part of a recipe that you create. And to be consistently successful, you need to keep cooking that same recipe the same time. Because again, or the same way I should say, because again, you wouldn't go to that magic restaurant that cooked their famous pasta a different time on every occasion, a different way on every occasion. So understanding these common indicators is great, but you also need to understand the context in which they're meant to be used. So here's some of the common ones. But this is kind of where this is where I find the most excitement in trading. And maybe that's why Jeanette and Hubert called me the crazy Aussie, because I'm a bit of a mad scientist. I like to put things together. I like to find that kind of combination where you can put each of these ingredients together and reverse engineer them and look for where things start to make sense. So I'm going to share a scan with you, for example, that I'm going to throw out there. So let's talk about something that's free, right? FinViz, great program. Let's go across to FinViz. So let's say you are an option trader, okay, and you like to look for surprise breakouts where there's big opportunities available. So the kind of things that, again, following through that thought-through process ideology, is if we feel the market is topping, which it has been, why don't we build in those types of factors we talked about before? So let's go to FinViz, let's go to the screener, and then let's search for stocks that have negative institutional transactions. So where stocks are being sold by institutions within the last 3 months. Let's look for stocks where the insiders are also selling, and let's make sure that they're reporting in the next 5 days, so we can perhaps buy the weekly option, or an option that has the least amount of premium built into it, so we can get the biggest uptick. And then, once we run that scan, which you can see this is one I prepared earlier, so to speak. I seem to be following through with the cooking analogies today. We can click on charts, and we can actually see that we get all of these charts available to us on one screen. Now, I use lots of charting programs. This is just one free example that you can use very easily. And where the importance now comes down to is your ability to eyeball these charts and pick out a weak pattern. So, for example, right here, can anyone spot what charting pattern we're seeing on CRE currently? Yep, head and shoulders. So here's your head and shoulders pattern, and you can also see we're also running into downtrending resistance, and it happens to be, if we want to confirm through market analysis, the market is weak, and if we want to then confirm in the sector analysis, it's also in the semiconductor sector, which is very weak at the moment. So CRE is in a bearish pattern, running into a longer-term downward channel with institutional selling, insider selling, and at resistance, with earnings coming up. And this is the type of situation where I would look for very cheaply priced, out-of-the-money options, put options, to benefit from, for example, a $2 or $3 drop on surprise bad news. What else can we see? You can see examples here of, so we want to be looking for ideal patterns. SRI is part of the automotive industry. That's been weak. That's running up into this $12 smart money drop. Look at this price here, dropped sharply. That could be a potential candidate. We've got, what else have we got here? We've got UM. Those are probably the three I would concentrate on, probably within the first two. So the trick here is then taking those stocks into account, and then running your analysis on them. But all the work now has been done for you by scanning with the appropriate process. If I didn't have scans, I wouldn't trade, because trading, isn't it about making your life better, being more efficient, having more time to do with whatever you want with it? So using up your entire day straining your eyes on a computer screen, are you really fulfilling what your objective of trading was all about in the first place? So for all of you who leverage your money with margin, options, futures, think about leveraging your time through scanning. So that's what the next scan I wanted to show you, for example, is and yes, you could reverse this scan for long trades, absolutely, Gary. Here's another idea I'll throw out at you. Short floats. So I'm a bit of a contrarian trader. I always like to look for things that don't make sense to the general public, because the general public don't usually make money. So we want to kind of do the opposite, right? So this is a scan about short floats. If you have a stock that is highly short, or highly shorted, I should say, what happens when everyone suddenly needs to make money off that short? They have to buy, and we get short squeezes. So another kind of idea here is to search for stocks that have insider buying, so the fundamentals might be indisclosably good. Institutions are buying, and the short float is above 25%, and of course, again, confirm with pattern. And we can do that once more using free online tools here. We can switch this around. We'll take that off. We'll turn that to positive. We'll turn that to positive. And we'll change our short float. Where's my eyes? Here we go. Float short. High, above 20. We can go 20%. And again, we then get a reading of stocks that have a very, very high short float that are approaching key support levels. So if you have a look at GoPro, for example, it's approaching a very interesting support level here, which previously spiked it up from what looks like around 36 and change straight up to almost 44 in a matter of days. This is a smart money buy zone where the algorithms, I'm guessing, probably kicked in, the high frequency trading, and sent this thing from hurtling down to hurtling up. So with a heavy short float, what do you think is probably going to happen around that $36 point? It's possible, at least potentially possible, that that's going to be a short covering, right? A short squeeze. And there we get dramatic rallies. And also think about the option chain. When something's plummeting, what's happening to the premium on the call options? It's going out of the window. So you can get options that are like 10 cents that on a 3 or 4% move back the opposite way, you can make 1,000% on, right? So you start to think of things a different way. And instead of being reacting to the market, you become a market architect or an engineer. And that's the way I like to trade. Now, no, this is not in FinViz Elite, but if you're missing all these options, what you need to do is just click the All button here, and that'll bring it all up for you. Okay. What is short float? Short float is how many shares in the company of its tradable volume is being bet against, essentially. Another question, why buy options 5 days before earnings when a lot of the move happens 6 weeks before and all the way up to earnings? What we're looking for, David, is we're looking for the surprise the other way. What I want to see in a perfect scenario is I want to see everybody buying the stock because they think the earnings are going to be good, and I want to see the stock rallying up, coming to a resistance point, and the whole time this is happening, I want to see the insiders selling, the institutions selling, and I want to see the smart money diverging. So as all the Joe public buys and slams the stock into the price that they think it's worth, I want to see the smart money going out, and I want to be buying puts as close to the earnings date as possible, so we can get a big surprise the other way. Let me show you an example. So here's a couple that we did recently. American Express. This was one of the ones that we've published on our YouTube channel a few weeks ago. So this had all the criteria we were talking about, and as you can see, what was happening is as the stock flatlined, the smart money was selling off in a dramatic way. So we picked the $90 August put options as one of our trade of the months. And just to give you an example, even if you bought them at the beginning of last week, on the August $90 put options on that trade, you would have made 1,300% on that trade alone. And again, as you can see, it was found in one of our option scanners. Price going sideways. You can see a descending triangle here. Lower highs, lower lows. Closes in the bottom half of the range, which means your stochastics would have been terrible, and then you get the big drop. And that's where the easy money is made. Again, same thing in CSV. Also, same typical process. Sorry, CSX I meant. If you want to look at another example, you could look at CF. which was another one that we'd highlighted, obviously in the potash industry. If you look at any of the potash stocks, you look at the agricultural index, you can see that's been plummeting. If you look at Mosaic, you can see that's been plummeting. And then you switch over to CF, which came up in our scan. And what you see here is you see a divergence pattern. And a lot of traders would tell you that this is a highly improbable pattern because it's a 50-50 that can go either way. I would argue, yes, it is a 50-50 pattern because it could go either way unless you know what the people that run the market, being the smart money, are doing. And there you see that while it was going sideways, there was a huge accumulation pattern going on. And that was the day that we made the recommendation there, was actually on July 15th. And those options went up well over 150% in 3 days. What day did we pick AXP? Let me just double check. And I'll come back to questions here in a moment. Okay, just give me a second. Oh, and another one while I'm looking for that, IBM. Probably one of our favorites at the moment. If you look at IBM, that's another example of a stock that came up in that scan. Beautiful head and shoulders pattern. And if you draw your trend lines properly, you connect those two lines. You can just basically auto extend that. There we go. Copy and drag. So you've got a beautiful head and shoulders pattern setting up on IBM. So then you, again, confirm, fine with your scanner. Confirm with a pattern, so macro head and shoulders. Look at the shorter term time frame. It's an upward channel, breaking that channel here. It's in a weak sector, which is the tech sector, which is one of the last ones to fall. And if you look at the money flow, you can see that as price increased, smart money sold off. And if you then went to look at the insiders, you'd see that basically all the insiders in this entire company have been selling off for months. So this one has a potential. I mean, this one's already up. I think the put options are up from $1. The October options are up from like $1.20 to $1.70 already. But I mean, this thing's got the potential to crash all the way down to 154 if that head and shoulders continues. Is Twigs the same as money flow on TradeStation? No, it's not. We do, if you do want the, we actually have the money flow indicator here designed in TC2000, Think or Swim, Metastock, and one other I'm forgetting. So yes, and so we do have that available. And again, of course, options during short, very similar. Options during earnings long, there's your criteria there. So once you've then developed the idea of how to scan for the stocks, then how to identify the high probability pattern, now you can use your indicators. Because this is when you know what kind of question you're asking. Because if you're looking for breakouts, you're going to be looking for different values on your indicators. If you're looking for reversals, different values. If you're looking for momentum, different values. And so you don't need to be good at everything. How can you? There's 100 different patterns. There's 200 plus different indicators. You don't need to worry about that. What you need to do is you need to have a few things. You need to be very good at identifying one breakout pattern at least. That could be a flag, or that could be an ascending triangle. You need to be very, very good at picking a reversal pattern. That could be head and shoulders. It could be double tops, triple tops, you name it. There's hundreds. You need to be very good at identifying a momentum trade, and that means at the beginning of the momentum, such as a fallen angel, and a continuation pattern, such as a cup and handle. You need to have basically a set of 4, 5, maximum 6 patterns. If you're really going to be a pro trader, you need to have the tools for the job. And that means knowing what the highest probability pattern is and knowing when to use it. As with any career, right? And it's not that hard. It's hard to know them all. It's impossible to know them all. But you need to know some to be able to concentrate on what the highest probabilities are. And then finally, you need to know how to identify where the smart money is going. We've been talking about that, but that is also something that you need to know. Twigs is not the same as Chaikin, no. And you won't find that indicator in TC2000. That is something that we've designed ourselves for a code that you have to import into TC2000. I'll come back to some questions in a moment, because I guess I want to make sure I drive this point home. It's all about efficiency. I said this at the start. If you read the 4-hour work week, what's the definition of wealth? Is it a guy who works a 60-hour week or a 100-hour week and making $100,000, or is it the guy that makes $60,000 working 10 hours a week? You got to think not just about profit. You got to think about time. And so coming to trade, you asked the same thing about day trading. I talked about why I like swing trading. I can spend about 5 to 10% of the time making 20% less, and I think that's a good trade-off. Because when you have scans, when you know what you're looking for, and you've got technology doing the work for you, you don't need to sit around waiting for it to happen. That doesn't sound like fun to me. I love day trading. I'm not saying don't day trade, but make sure you're being efficient about how you find the opportunities. And when you know how to find these opportunities, that's when trading is fun. You're not worrying about whether you're right or wrong. You're not worrying about are you on the right or wrong side of the trade and how to repair it. You're simply thinking, did I follow my rules? Did I followed the rules with my scan? I confirmed it with the pattern and the indicators. I knew exactly what I was looking for. Yes, it met the rules. I've got to trade. And that takes a hell of a lot less time. For each strategy that I trade, it's about 20 minutes of research and picking the entry and exit points. So for the 4 or 5 strategies that I use, it's about an hour and a half a day. And the rest of the time, you do what you want. I can see a lot of questions coming in here. Does Twigs work in Thinkorswim? Yes, we have the code for that. Does FinViz scan futures? I've never actually scanned futures because I'm a big options and stock guy, so I don't use FinViz for that. How do you scan the thousands of stocks? I'll come back to that. Are these trading examples for options mainly? No. This is actually we started out purely concentrating on stocks, so the options are simply a platform to leverage that. So you're all waiting for it. You know that I was coming to this point. What's next? For all these questions you're asking, this is what we're covering in our next workshop. The focus is going to be on flags, but that's not all we're going to be covering. Let me tell you what we're going to be covering. Flags is one of the highest profiting strategies that I've come across. I've always known it was one of the highest. I mean, we did analysis on the 65 patterns about 5 years ago and looked at thousands of trades that apply to them, and we ranked all of the strategies based on profitability, probability, and predictability, and then from 1 to 100. And flags was one of the very top strategies. So it's one that I scan for every day. But I didn't trade it for the first 8 years of my career because it was impossible to consistently find the opportunities. So it wasn't worth, to me, in my mind, it wasn't worth wasting hours and hours and hours going through stock after stock after stock trying to find the damn thing. And it was actually during a coaching session with a client that off the cuff we stumbled across a scan that we were just making up on the spot. that started to find them, and we started tweaking that for about 6 months, and it became one of my favorite strategies because it does pump out excellent flags on a consistent basis. And basically, flags are something that has huge upside potential. I'll bring up some examples of that in a moment and go back to these questions. But what we're doing in this workshop coming up on the 20th is we're going to be doing it's a scanning workshop. And the first and most important thing we're going to teach you is flags, because you can walk away and only trade flags, and these things look they come out with sometimes 10 to 30% jumps in very short periods of time. Even in bear markets, you get these big breakouts that are fairly quick. And the difficult thing for most people that maybe already know about flags is finding them, and also knowing when to get in and how to, in a process or scientific way, measure the exit point, so that you don't have to think about it. You shouldn't be stressing about when to get in and get out. It should be a rule. So we've basically developed a very, very, very straightforward process that allows you to identify this exit and exit points. And yes, the webinar is absolutely recorded, and you're allowed, and anyone who participates in the webinar can actually participate in any future events of the webinar. So we go through all of these different points. But we don't just cover flag. We'll also be going through other scans that we use. I've covered a couple today, such as the earnings options during earnings season and so forth. But what is also included in that is some of the other scans we do, such as searching for stocks that are at extreme reversal points, which is one of the other strategies that I use on a daily basis. The reason we promote the flags as the topic of this webinar is because it's the one that's really producing the most amount of profit over the last 3 months, above and beyond anything else. So for you to get the biggest value out of your money, that's why we want to kind of make the focus there. What we'll also be covering is some of the other scans in terms of how to identify smart money buy and sell alerts. And we'll also be including a month of Platinum Pick service. Now, and this is pretty awesome. We only released this about 3 months ago, actually in June, but it's been probably our most popular product. Basically, what we do on a week, basically 2 or 3 times a week, is we will analyze the entire market, the S&P 500, and our top 4 to 5 picks of what we feel is going to happen. So IBM was one of them, CSX, American Express, CSX, CSV, LDRH. When the market was topping on that head and shoulders pattern before it dropped, we alerted that through the Platinum Pick service. So this is the alert service I see that a lot of people are asking about here in the chat room. Yes, this will come out to you. So you get basically what's called an executive summary video, because we know you're all busy. And so that comes out. It's basically limited to about 5 minutes on the short side to the maximum of about 8 or 9 minutes on the long side. And it basically just gives you all the juicy bits that you need to know after the research that we've done. So we do the hard work. Then we send you out what we are looking at for the next day with entry and exit points. And it's pretty simple. What we do with the nightly updates is that's an email we send out every night. And that comes out basically updating what we feel are happening with all of those positions that we're talking about in the executive summary. So all you need to do to do that is just go to the website at the bottom of the screen. For those of you who are asking what that says, it's acornwealthcorp.com/pick. All right, let me answer some questions. And maybe one of the questions is how we're doing on time. But let's have a look here. The webinar, yes, absolutely will be recorded. Yes, we will be teaching the scans which apply to stocks as well as options. yes, we will include the indicator, the Smart Money Scanner for for Thinkorswim, Metastock, Incredible Charts, and TC2000. You will have that included in that workshop. The alert service comes out usually around about 5 o'clock Pacific time, which is also complemented with the executive summary video, which comes in a separate email. How do you scan the thousands of stocks? Well, basically what we did is we reverse engineered an algorithm which alerted us to essentially what the key common characteristics were in certain trading patterns, and then built that into various programs that allowed for programming. Does your methodology work on E-minis as well? Yes. The strategies we use are all about understanding where the smart money is going, and the smart money applies to any kind of index. It's about understanding what shows where the money is going. How reliable are flags in range-bound markets? Very, because flags are talking about, have a look at this. Here's an example of that. Here's actually one of the ones we posted on YouTube just a couple of days ago. So we'd had a pretty bad market, right? But there's the flag formation there on SNCR. There's your flag, and there's your big pump on Tuesday, August 5th. Are you identifying day trades or swing trades? Both. This was one of the day trades we identified yesterday. Well, I should say Thursday. AAV, Advantage Oil and Gas. Here was another one as a long for a day trade, HIMX, which did 5.72% on Friday. So yes, we do identify both. Do we get an email with the particulars of what we just paid for? Yes, you do, absolutely. How would you scan for stocks in Thinkorswim? We give you that scan. We actually have for Thinkorswim and those platforms I mentioned, there is a video that comes with the package that shows you how to set up the scan and everything that comes with it in those platforms. So it's all you need to do is just click play and follow the instructions. Are you going to show us how to scan by ourselves? Absolutely, that's the most important part. This is not about having you limited to one scan. As I said, flags is the focus, but what you are meant to come away with from this experience is the understanding of how to create the ideas yourself, because that is really the important thing. It's not about knowing all the whiz-bang terms. It's not knowing about what harami candles and spinning tops are. The terminology doesn't matter. What matters is knowing how to understand the fundamental foundation of what makes it work in the first place. And that's what this is all about. We're going to give you the flag scan. We're going to teach you about the smart money scan. But most importantly, we're also going to show you how to build your own scans as well and create those ideas. Yes, the scan is available on Thinkorswim. Is the scanner included in the $97? Yes, it is. The scanner is included. Is the executive summary included? Absolutely. Okay. We got one more minute here, I'm being told. So we'll have to wrap up. But if you do have any more questions, we're more than happy to answer them via email, coaching@acornwealthcorp.com. It is 97 Canadian. So if you're in the US, that's a bit cheaper for you. There you go, and there's the details there on the chart. So if you do have any questions, I'll be sticking around for the next hour listening to the next presenter, which I'm sure is going to be fantastic. Looking forward to it. So if you do we teach a proper methodology of a successful trader? Yes, we do. David, those stocks, if you want to email them to me, I'm more than happy to shoot you a quick reply, we do have to we've run short on time. But yeah, any questions at all, feel free to give us a call, drop us an email, and I'll look forward to seeing you all in the workshop. I'll pass it back to Jeanette here. Thanks so much, everybody.